Let's talk a little bit about the gold market. And you know, we've just gone through a bit of a correction here the last couple of weeks. What are your thoughts?
I think it's just a normal and healthy correction. I've just seen that open interest decreased to a 2 years low, so it's been kind of a washout. And if it's just been the margin hike, they hiked it for, I think, roughly 20% in gold, silver, and in copper. I think it's not really useful to look for the reasons for this correction. I think it's the fact that I got so many calls on Monday from journalists and from investors, and they were all kind of asking, is this the end of the bull market? Did the bubble already burst? The fact that the negative turned that bearish so fast, that makes me kind of confident that there's not too much euphoria priced into the gold price. And I think you know, right now we're like 15 or 16% below the all-time high. If you compare it to most of the stock indices, for example, I think gold is still up by 22% this year in euro terms, and also more or less in US dollar terms. The German DAX is in the reds by, I think, 25%, something like that. So it's been great performance on a relative but also on an absolute basis. And as I've said, I think that the sentiment turned a bit too bullish, especially in August. We had this, we've had in many tabloid newspapers, for example, we had gold on the cover of those newspapers and magazines. So that made me kind of cautious. And there was also like many big banks like JP Morgan predicted gold to rise to $2,500 by the end of the year. So that made me kind of cautious, and right now I think we will consolidate within the next few weeks. Normally October has a not really horrible, but not a very good seasonality. And I think in the next few weeks the volatility should decrease in terms of a normal correction, and then we'll make another leg up.
Yeah, markets at the end of the day are always driven by fundamental factors and fundamental reasons. Has there been any fundamental change from the beginning of August to now that would cause you to suspect that this bull market in gold, which is now 10, 11 years old, that it's changing or ending?
I don't know. Did real interest rates turn extremely positive? I don't think so. Did our structural problems within the economy and over-indebtedness?
Last time I checked, the sovereign debt crisis hasn't been solved, has it?
No, I didn't read the newspapers this morning, but I don't think so.
Is there anything in your mind that could suggest that fundamentally, gold has changed now from what it was 2 months ago?
I mean, the price did change. Absolutely, and that's what we said at the beginning. If you're like a swing trader, you're just selling at 1900, and which is perfectly okay. Yeah. But from an investment perspective, I think that's the perfect environment for like constant accumulation. I just looked up the demand numbers coming from China and from India, and what we shouldn't forget, and this is what Frank Holmes, for example, calls the love trade and the fear trade. I don't think that gold is an investment or an asset class for pessimists. It's also for optimists. And 60 or 62% from total demand coming from Asia, from China, and from India especially. And with their growing prosperity and their deep affinity towards gold, I think the general uptrend in demand coming from China and India will continue.
Meaning that there's increasing recognition that gold is a form of liquidity, that it's a form of money?
Absolutely, and what's really interesting from the kind of phases of this bull market is, I think when I talk to our clients or the media, like a few years ago, the perception was always that gold is a commodity, and right now I think people are more and more getting the monetary aspect of gold, and they're understanding why gold is money for so many hundreds, so many thousands of years, that gold cannot be debased, that it can't be printed, and I think this is one of the factors that is going to be kind of the next stage of this bull market.
Yeah, that's a point that I like to make as well. You know, the factors that made gold as money in the first place, they haven't been lost or they haven't disappeared. They've just been ignored or forgotten the past few decades as we've had this experiment with fiat currency going on. And as we see this experiment with fiat currency going badly, people are looking for alternatives, and they're rediscovering those attributes that gold has. Number one of which is that it's money with no counterparty risk. You know, because it's a tangible asset, it's not based on someone's promise. It's based on the value of the asset and how the market perceives that asset. And you know, given a 5,000-year history, I guess one would have to assume that for the foreseeable future anyway, gold is going to continue to do what it's done for these past 5,000 years, continue to be accumulated because it's money with no counterparty risk. I guess you see it the same way as well.
Absolutely.
Yeah.
And you know, stock to flow ratio is one factor, and I think this loss of trust in the euro, but also in the US dollar, but also in our political system. I think this the trend is kind of picking up momentum right now, and as you know, in every trend at the very end is this parabolic move, and I think that we also gonna see for the loss of trust. So there's gonna be one day when people will wake up and they're gonna realize, okay, our fiat currencies are backed by nothing. It's only a promise, and then they're gonna realize that there's a real alternative with a 5,000-year-long history.
Yeah.
And I mean, you know, being bullish on gold also means kind of being bearish on our like political and financial future, and I think that's a real big concern right now.
Mm-hmm. Are you seeing a demand here in Vienna for physical metal picking up as a consequence of this recent fall in price?
Yeah, on last Friday and on Monday I called some physical traders and I talked to our guys dealing with physical gold in the bank, and they said they had huge demand. So I think there's a growing, how should we say, difference between the paper gold market and the physical market, and it makes me confident that people kind of use this correction to buy into physical gold, but because this also means that they were kind of waiting on the sidelines, which is smart, and they didn't want to buy into this sharp up move, and that's also a good sign for this long-term trend. And when I'm talking to journalists, one of the first questions always is gold in a bubble, and that's on the other hand also a very good contrary indicator, because when media and most of the analysts think that it's already a bubble, then I'm pretty sure that it isn't a bubble.
Yeah, I agree. We're still early days, I think.